And of course, there's plenty of more to get into with Tesla's latest earnings report here. And for more on that, I want to focus back more on the business side of things. And for that, let's bring on our next guest, Craig Irwin. This is Roth Capital Partners analyst who covers Tesla. And Craig, I mean, when we dig into it, let's just put the Bitcoin thing aside for now. But when you look at the metrics they reported, obviously we've talked quite a bit about kind of their changing mix, the Model 3 becoming more and more important as they approach kind of the mainstream customer here. But what did you make of the quarter and the way that the underlying fundamentals and financials that we got from them might show that that's starting to weigh on the company?
So mix is a very important thing to monitor over the next series of quarters. When the new Model S and Model X come on, there will be a little bit of a headwind from initial production. There was actually a headwind in this quarter that I think most people are forgetting to really talk about. Automotive gross margins did beat. They came in at 22%. That excludes a $200 million drag from preparations for the new Model S and Model X. It's 220 basis points. So they would have been well ahead if it was not for that actual item. So, that typically would have caused the stock to go up. But the fact that now we have, 118 million increase sequentially in regulatory credits and then the Bitcoin sales you point out. So, neither the bulls nor the bears really won this quarter. But margins are the focus going forward. Can they really keep the margins up where they are with all the competition coming on and pressures of new production, which typically does start at a lower margin point?
Craig, how much of a risk is there to Tesla's earnings going forward if that regulatory credit side of the business starts to dwindle once other automakers start making more electric vehicles of their own?
Well, I mean, let's just put this in perspective, right? There was $533 million in pre-tax income, and 518 of that was regulatory credits. The rest of it's Bitcoin. So it is a big risk. I think President Biden has some ambitious goals as far as supporting EV adoption. Tesla's obviously the biggest beneficiary of a reinstated federal tax credit or an expanded federal tax credit. So, it's hard to be bearish on that, right? But I think that a lot of that is already baked in, and given that there's been discussion about this for months at this point.
Yeah, that to me would be kind of the scary thing. I just want to reiterate what you're talking about there because, it's the credits and it's Bitcoin and you had record deliveries. So if you're an investor and want to buy in here, it would seem that you're really buying into the long-term idea that the Model 3 and kind of this mainstream takeover to eat into the market share is going to continue. Otherwise, it looks like it's going to be a tough road ahead for Tesla. I mean, is that the right way to be looking at it at this point where we're sitting above $700 a share?
So I have a neutral rating and a $150 price target. The reason I'm neutral is I see some very positive deltas over the next series of quarters, but I see the valuation at current levels as egregious, right? Egregiously overvalued. I think the competition is going to do very, very well. I think we're going to start seeing more evidence in this in the back end of the year. And, news has started to come out about Apple and LG and what they really plan on doing. I have flagged this for people in the past. Apple is almost certainly going to be out there with a credible vehicle in the not too distant future. How does that impact the typical retail investor's view on Tesla? That's what's going to determine whether or not, Tesla flies higher or comes back to earth. I'm in the camp that really does believe this does come back to earth, and, you'll see improving valuations on emerging competitors.
When you talk about the competition, who do you think is going to be the biggest competitor to Tesla? And do you think the company has enough of a lead here in EVs and especially autonomous vehicles to maintain an edge for a number of years?
So, they're going to be, it's very difficult to predict the success of which models, right? Buyers tend to be a little bit fickle. They buy based on fashion and on design preferences and things like this. So I don't want to call out individual winners, right? I will say that brand is very important. Design is very important. So, names come to top of mind there. But you could see some of the legacy OEMs do very, very well. For example, Porsche took some serious knocks for the range on the Taycan when they launched it. But if you drive that vehicle, it's an insane car. And now you have the Taycan outselling the 911. That's pretty a pretty seismic event for Porsche, right, in electric vehicles. Now, when they go out there, I'm sure they're going to redesign things to get an EPA mileage rating that's a little bit better. And I wouldn't be surprised to see silicon carbide in the drivetrain, which means that their Turbo S is going to be far better than a 2-second car. It could be 1.7 second with silicon carbide today. So insane performance. There's many others out there that have the engineering capabilities to do this. I wouldn't count the old OEMs out of the game.
Yeah, obviously that competition piece still there. We know it's coming, but at the very least, Tesla continuing to report impressive delivery numbers in at least one of those coming from the extended Guzman family. This week, we'll see what the final number is going to be. But Craig Irwin, appreciate you coming on your chat. Roth Capital Partners analyst, thanks again for the insight on the quarter.